Hi, folks. This is Daniela Camboni, and welcome back to StansberryInvestor.com. Before we start today's segment, though, I want to just share with you a report that Stansberry Research has put out that I highly recommend you check out. With most investors going about life investing and retirement planning as if nothing unusual has happened to our financial system, not realizing the repercussions of the 11 trillion that's been pumped into the US financial system in the past 18 months alone, it's particularly a good read at this moment in time. At least 4 billionaires have stated publicly that Americans aren't paying enough attention to this development. And now a former Goldman Sachs banker says sooner than most people think, millions of Americans will potentially be pushed down out of the middle class, out of private retirement, and out of a decent life based on independence and privacy into a collectivist nightmare he calls financial lockdown. So find out how to protect yourself, your money, and your family with a free copy of his new report. In it, he'll show you the 4 steps he recommends you take immediately. You simply have to go to www.wakeupcall2021.com to get a free copy of this report. Again, it's www.wakeupcall2021.com. Get your free report today. It's a great read. All right, that said, we are talking all things silver today with my guest. He is Garrett Goggin, editor of Stansberry Research's Silver Stock Analyst, one of the best newsletters out there. Garrett, always good to see you. Welcome back.
Hey, Danny. Thank you. Thank you for having me. Nice to see you.
Absolutely. Well, I had to bring you on because so many questions about what is going on in the silver space. I don't want to spin it with a negative connotation here. I always like to see both sides of the story. So just to paint a picture here, last week, Garrett, as you know, we saw the price drop below 22 bucks an ounce. That was the lowest price in the last 12 months. But at current levels, the metal is still up nearly 100% from the pandemic lows of March 2020. So it's a question of, is the glass half full or empty?
You got to take a longer term view here, Danielle. It's been a rough year for silver investors, but, take a look at what's going on right now. You've got the budget debate. They're arguing about spending another $3.5 trillion. And, to me, it's kabuki theater. It's just all the sound and fury, meaning nothing. When it comes to the deadline, they're going to vote it through. And, it's another trillion. And they spent about $3 to $4 trillion over the past couple of years during the COVID stuff. $1 trillion is a lot of money. I have a 6-year-old. I'm teaching him how to count. He counts to 100. He wants to count higher. What's a million, a billion, a trillion? You know how long it takes to count to 1 trillion? If you count one number every second, it takes 35,000 years. I mean, it's absolutely insane what's going on. And then the other thing too, the reason why silver is down so far this year is because, the Fed's talking about a taper. And, look at, the numbers. I like looking at data and statistics and numbers. The Fed's balance sheet is $8.4 trillion. It's up another $1 trillion just this year. In 2019, last year, it was at $4 trillion. So the Fed's balance sheet has basically doubled over that time. They're talking about a taper. There's no taper. You can't taper the Ponzi of the U.S. economic system. The Treasury keeps printing the debt, the bonds, and the Fed keeps buying them. The Fed's balance sheet is going to keep going up. The money supply is going to keep going up, and silver and gold are going to do what they've done over the past thousands of years, and they're going to provide protect you in times of high inflation.
So just on the note about taper, you don't think the Fed will be able to raise interest rates?
Oh, Garrett? Absolutely not. One of the things I was looking at is they might be able to raise them a little bit, but one of the things that drives metal prices, silver and gold, are real rates, right? Real rates are, the 3-month or the rate of interest minus the inflation rate. So if the inflation rate is higher than the interest rate you're getting in a bank, people look to stores of value. So right now, you're getting 3 basis points through the 3-month rate, and the CPI is about 5%. It's a negative 5% interest rate. You're losing 5% of your purchase power every year. In 1980, we were in a strong real rate, negative real rate environment also. And the CPI was 13%, 14% back then. You know what the 3-month rate was? It was 12%. If the Fed ever, started raising rates that aggressively, the whole economy would absolutely fall apart. They might raise them a little bit, but not much yet.
So you mentioned the Fed part to this equation. What about Bitcoin playing a role here, Garrett, if any? We hear so much talk about how
Yeah.
Bitcoin has affected the market cap of gold. Is it taking a toll on
Yeah,
silver?
gold and silver have been stores of value for thousands of years, and Bitcoin's come along, and what's ironic right now, Bitcoin's done great. People would rather trust this virtual currency that nobody knows who invented than our U.S. dollar. And you know what? It's our elected leaders that spend ridiculous amounts of money, and it's the Fed's fault. No one trusts the U.S. dollar and the U.S. economic system. They trust Bitcoin because you can look in the blockchain, you can see all the transactions, and it's limited. It's got a limited amount of money. The same people that are investing in gold and silver are the same mindset that's invested in Bitcoin. They see the dollar losing value, and they want to protect their dollars against inflation. And one of the things that's really interesting right now is I don't see these working against each other. I see crypto and gold and silver working together. One of the really interesting things in crypto right now is decentralized finance, DeFi, right? So you know how banks make money, they loan it out, and they charge interest. So they make the spread between the amount of money that they loan out and the amount of money that they pay. So decentralized finance and crypto has gotten rid of that middleman because it is all a DAO, decentralized autonomous organization. So it's returning that spread to the investor. And there's crypto products out there right now that are linked to the price of gold and linked to the price of silver. They can never find one that delivers a return of say 3%, 4%, 5%. You own gold, you own silver, but you get a 5% interest rate on top of that. That could change the game.
Interesting. I want to talk about the silver miners now, Garrett. That's what your newsletter focuses on. This is an important data point. Silver miners ETFs just had their worst quarterly outflows ever on record. Again, glass half full or empty, there's some deep value opportunities here.
Yeah, no doubt. Some of the stuff I look at, like I said, I don't necessarily like to time the market. I'm a believer in data, probability, statistics. The COT, the managed money, it's at 1% net long. It's the lowest it's been since 2019. It is one of the lowest percentages, it's in the lowest 18% of percentages since over the whole time frame for 20 years. It's 1.5 standard deviations below the norm. If you look at the HE at NSI, it's the same thing. It's 1.5 standard deviations, 2% below the normal. It's one of the lowest levels it's been in a long time. If you look at those stocks above the 200-day moving average, it's basically at zero. All these things are signaling a silver bottom here.
Okay, speaking about silver miners, I just want to bring up a quote from Keith Neumeyer, CEO of First Majestic, who we both know very well. As you know, he's been a big advocate of ending silver price manipulation. And he recently tweeted this. He says, it's time for the CFTC to support investors. That's what they were set up to do, protect investors. He's saying, remove the banks from the pricing of silver. Do you agree with that?
I saw that tweet. I highlighted it. I liked it. It was one of my favorite tweets from Keith over the past few months. I want to talk about that too because the gold and silver market, it's driven by the CFTC, the COMEX exchange, and it's driven by the LBMA. LBMA trades all the physical. If you look for any data regarding the LBMA as far as volume, as far as gold loaned out or silver loaned out, you can't get it. It's closed. You can't find that information. The futures exchange, you can find the amount of that is long, that is short, but it still gets pretty murky. And then as far as gold in the vault, like regarding ETFs, and as far as the amount that is loaned out or swapped, it's impossible to figure out. So that's why people like crypto versus gold and silver at this point, because crypto is totally transparent. Gold and silver are murky. You don't know what's going on where. But if silver and gold were ever able to get like a solid crypto product, that they'd be able to raise a significant amount of capital to pay the silver miners for the silver. It'd be open, it'd be transparent, it'd be a home run. I know Sprott has got some crypto products going on, but the transparency would be a welcome event for the silver and gold market.
Interesting. So from what I'm hearing from you, you're a big advocate or would like to see more of these crypto products backed by physical silver?
Yeah, I think that'd be a game changer. If you could get a silver or gold product with with some return attached to it, because
But there's a lot out there already, right?
I think,
I mean, I'm not going to name them, but
there's a few out there, right now. But
any that you like, or, I'm not asking you to endorse, but do you think, just in general, are they legitimate to you? Do you like them, or do you think there's room to work on?
I don't think any of them have gained a critical mass here. So, I'm keeping an eye on them, and, if people are interested, I will, keep a closer eye on them. But, it's just sad that, a huge market like gold and silver has absolutely zero transparency. And, we get a product like crypto that's traded in China and teenage is ultimate. Yeah.
So getting back to the opening point of this frustrating silver price for a lot of investors, Garrett, why haven't we seen, there was so much enthusiasm at the start of the year around like the Green New Deal and what this might do to silver and the whole industrial component, and we need silver now more than ever. Why isn't that coming through in the price yet? Or when will it happen? Or have you lost faith?
No, I definitely haven't lost faith. You look at, the physical silver market, the producers generate about 800 million ounces a year. That's not increasing. It's decreasing a little bit over the next few years. And then you get industrial, jewelry, and silverware that offset all that $800 million ounces of silver production a year. The silver market's been in a net deficit for basically like 10 years. And then, you had the silver ETFs buying hundreds of millions of silver ounces over the last year. It's changed this year, but silver is used up in technology, on your iPads, on your iPhones. They use it in electronic vehicles. They use it in manufacturing batteries. They use it in, manufacturing solar products, cruise missiles. You know how much silver they have in cruise missiles? It's like 500 silver ounces in each one. Silver is a strategic metal. It's an industrial metal. It's used up, it's consumed. And that's the difference between silver and gold. So it's just a matter of time before, the prices start reflecting the tight physical market.
Okay. I know you said at the beginning you don't like forecasts, but I know in the past we spoke about triple digit silver. Is that still a possibility? Have you since changed your forecast, or at least the inner forecast you keep close to your heart? Where do you see silver and gold prices headed?
Yeah, one of the things that's interesting regarding silver prices right here, if you look at the prices of basically every asset in 1980, silver is the only one that is below its average price in 1980. You get gold, you get zinc, you get nickel, you get gasoline, you get everything. It's up 200, 300, 400,000%. Silver is the only asset that's below its average price in 1980. It offers tremendous value right here. As far as the prediction goes, I don't know. Just naturally, you're looking at $50 an ounce. One of the interviews Keith just did, Keith Newmeyer, he's been talking about triple digit silver. He just upped it to high triple digit silver. So that's 100 to left 200. So, it's huge. Right. And the way things are going right now with inflation, inflation is definitely a factor. The Fed talks about it being transitory. When inflation goes up, prices don't go down in the future. It's not transitory. It's going to stick. And, inflation, it continues moving higher right now because they keep printing more money, and it's just a matter of time before silver catches up and reaches its fair value of $50 to $100 an ounce.
So you said it's a buy here. Do you prefer the miners over physical?
Yeah, because the miners, they offer leverage, because as the price of silver goes up there, the miners, free cash flow, will explode in value. So the miners are cyclical, the longer term they go up and down, but if you can time it right, like pick a bottom of the market, you can make a tremendous amount of money. Some of the levered ones, they get 300, 500, 1,000% in a matter of months. And, based on, the sentiment, managed money and the DSI, the 20-day moving average is 18. It's one of the lowest it's been over the past 20 years. Yeah, they're looking like a good time to get in.
Awesome. Fantastic thoughts. And you can read about Garrett's thoughts and picks on the mining sector and silver with Silver Stock Analyst. Garrett, always a pleasure having you on. Thank you.
Great. Thanks, Danny.
Thank you. And thank you all for watching. We'll have much more for you. So be sure to stay tuned to Stansberry Investor. In the meantime, don't forget to sign up for premier content you can't get anywhere else at danielacambone.com. That's it for me. Thanks for watching.